Something strange is happening in the silver market right now, and most people haven't even noticed it yet. While everyone's been talking about gold, quietly, almost without announcements, silver has been climbing toward a number that hasn't been seen in decades. We're talking about silver pushing toward $94 per ounce. And if you think that's just some random price movement, you need to stay with me for the next 10 minutes, because what's actually driving this goes a lot deeper than most financial channels are telling you. There's a signal appearing in the market right now, a pattern that has shown up before some of the most significant precious metals runs in modern history. And today we're going to break down exactly what it means, who's moving this market, and most importantly, what you should actually be watching for in the coming weeks. So don't go anywhere, because this story is just getting started. Before we get into it, if you're new here, welcome to John AG 1.0. We cover precious metals, market signals, and the kind of financial analysis that actually matters to regular people. If that's your thing, hit that like button right now and subscribe so you never miss a video like this one. It genuinely helps the channel more than you know. All right, let's dig in. Let's go back just a little bit to set the stage, because context is everything here. Gold has been on an absolute tear. It's been holding strong, and that in itself is notable because gold doesn't usually hold at elevated levels for long without some kind of pullback. The fact that it's holding tells us something about the macro environment we're in right now. And we're talking about persistent inflation concerns, geopolitical uncertainty, questions about currency strength, and a growing number of institutional investors who are quietly rotating into hard assets. All of those forces are pointing in the same direction. But here's where it gets really interesting. When gold holds strong for an extended period, historically there comes a moment when silver starts to wake up. And that moment might be right now. Silver at $94 is not just a number. Think about what that represents. For years, silver was stuck in a range that felt almost frustratingly low given its industrial and monetary importance. Silver isn't just a store of value like gold. It's used in electronics, in solar panels, in medical equipment, in electric vehicles. The demand side of silver's story is fundamentally different from gold's, and right now both the investment demand and the industrial demand are building at the same time. That convergence is rare, and when it happens, markets can move in ways that surprise even seasoned analysts. Now let's talk about this new market signal, because this is the part that should really grab your attention. What we're seeing emerge is something called a gold to silver ratio compression. Now I know that sounds technical, so let me break it down in plain language. The gold to silver ratio simply tells you how many ounces of silver it takes to buy 1 ounce of gold. When that number is very high, historically it has meant silver is undervalued relative to gold. When that ratio starts compressing, meaning silver starts gaining ground on gold, it often signals a broader rally in precious metals, with silver leading the charge. And right now, that ratio has started moving in silver's favor, slowly at first, then faster. This is the signal. This is what the smart money watches. Now here's where I want you to really pay attention, because this is where most people get confused. They think precious metals are just about fear. They think people only buy gold and silver when the world is falling apart. And while that fear-driven demand is real, it's only part of the picture. The deeper and more powerful driver right now is a structural shift in how major institutions are thinking about portfolio construction. For decades, the standard advice was stocks and bonds, 60% equities, 40% bonds. But that model has been quietly fracturing. Bonds haven't been performing the way institutional models assumed they would in a rising rate environment. So where does the money go? It looks for assets that aren't correlated to equities and bonds. It looks for things with intrinsic value. It looks for silver and gold. But here's the twist that most people miss. Institutions don't just buy gold when they make this shift. They buy silver too. And because the silver market is significantly smaller than the gold market, when even a fraction of institutional money rotates into silver, the price impact is disproportionately large. We're talking about a market that can move fast, that can move dramatically, and that can leave retail investors who weren't paying attention completely flat-footed. That's why this moment matters. That's why watching silver approach $94 is significant. It's not just a price on a chart. It's a reflection of deeper forces realigning. Let me tell you about a historical parallel that I think every person watching this should understand. Go back to the late 1970s. Silver sat dormant, underappreciated, overlooked for years. Then a combination of inflation, monetary policy shifts, and changing investor behavior created a perfect storm. Silver went from under $6 an ounce to briefly touching $50 an ounce in a matter of months. Now, I'm not predicting that kind of move today. That situation had unique factors, including some extraordinary market activity by specific players. But the underlying dynamic, a metal that had been sleeping, waking up to a new reality, is something that echoes in today's market in ways that are hard to ignore. History doesn't repeat exactly, but it rhymes loudly. Now let me talk about something that doesn't get enough attention in these conversations, and that's the supply side. Because when we look at what's happening with silver supply, the picture becomes even more compelling. Silver mining is a complex business. A significant portion of the world's silver doesn't come from primary silver mines. It comes as a byproduct of mining other metals like copper, zinc, and lead. What that means in practice is that silver supply is not very elastic. When silver prices go up, miners can't simply flip a switch and produce a lot more silver overnight. The supply takes years to respond to price signals. So if demand is accelerating on multiple fronts, investment demand, industrial demand, and the supply chain is slow to respond, the math starts to look very interesting. Add to that the solar energy revolution. This is a factor that is genuinely changing the long-term demand picture for silver in a way that wasn't even on the radar a decade ago. Modern photovoltaic solar panels use silver in their cells because of its exceptional electrical conductivity. As the world continues its energy transition and solar installations continue to grow at a rapid pace, the industrial appetite for silver is being driven by forces that are largely independent of financial markets. This isn't speculative demand. This is real-world consumption that is growing year after year. And when you layer financial investment demand on top of industrial demand that's already structurally elevated, you start to understand why analysts are paying close attention to this moment. Let me be clear about something important here. I'm not here to tell you to rush out and buy silver tomorrow. I'm not a financial advisor, and nothing in this video should be taken as personalized investment advice. What I am doing is walking you through the signals, the history, and the structural forces so that you can make informed decisions for yourself. The goal is understanding, because in markets, the people who understand what's happening and why are the ones who can act thoughtfully rather than reactively. So what should you actually be watching for? Let me give you a few specific things to keep your eye on. First, watch the gold to silver ratio closely. If it continues compressing below historical averages, that's a meaningful signal. Second, watch the bond market. If yields continue to create uncertainty and institutional money keeps looking for alternatives, precious metals broadly benefit. Third, watch the dollar index. A weakening dollar historically correlates with stronger precious metals prices because silver and gold are priced in dollars globally. When the dollar weakens, it takes more dollars to buy the same amount of metal. And fourth, watch the solar and EV supply chain news. Any sign of tightening in silver supply chains for industrial use adds another layer of pressure to an already interesting setup. Now here's something I want you to think about that almost nobody talks about in these videos. There's a psychological component to precious metals markets that is just as important as the fundamentals. When silver starts making headlines, when normal people start hearing about it, when the narrative begins to shift from gold being the only safe haven to silver being the undervalued opportunity, that narrative change itself becomes a market force. Because markets don't just respond to facts, they respond to stories. And the story of silver right now has all the elements that tend to capture public imagination. The underdog, the overlooked asset, the late mover that suddenly everyone wishes they'd noticed earlier. We are not at that mass awareness moment yet. We are at the earlier stage, the stage where the signal is visible to those who are paying close attention, but hasn't yet reached the mainstream financial media cycle. And historically, that earlier stage is where the most significant moves begin. Gold holding strong is not a coincidence in this environment. It's confirmation that the broader macro case for hard assets is being validated by the market itself. Smart investors look at gold's strength and ask what else in the hard asset space might be about to move. Silver is the obvious answer. And with it approaching that psychologically significant $94 per dollar level, the market is having that conversation right now in real time. Before I wrap up, I want to ask you something directly, and I genuinely want to hear from you in the comments. Are you currently watching silver, or have you been primarily focused on gold? And have you changed your thinking about precious metals at all over the last year or two, given everything that's happened with inflation and interest rates? Drop your thoughts below, because this community has some incredibly sharp people in it, and these conversations genuinely add value. If you know someone who has been asking about silver or who's been thinking about precious metals investing, share this video with them. It might give them the context and the framework they need to understand this moment. Your share goes a long way in helping this channel reach people who actually want this kind of information. Here's the bottom line. Silver approaching $94 while gold holds strong isn't just a price story, it's a signal story. It's telling us something about where institutional money is moving, about the structural role of silver in a changing industrial landscape, and about the kind of macro environment that tends to precede some of the most significant precious metals moves in history. The new market signal appearing right now is being read by the people who are positioned to act on it. Whether you act on it or simply understand it better after watching this video, that knowledge has value. And that's what this channel is here to provide. I'll see you in the next one.